Okay, you guessed it. Actually, you probably didn't guess it, but this is going to be my last lecture for today because I'm starving. It's noon and I am literally dying of starvation. Okay, but the good news is that this lecture, this video, super short. So what we want to do is I want to convert income under variable costing to absorption cost basis and flip. I can move from variable costing to absorption costing. Okay. So anyway, I have a income statement. It's variable costing and I want to convert it to absorption costing. The formula is going to be this right here. So I want to determine income under absorption costing. So what I'm going to do is I'm going to start with income under variable costing. Then I'm going to add fixed overhead in ending finished good in inventory. And then I'm going to subtract fixed overhead in beginning finished goods inventory. Okay. So in the instance where I have no inventory in finished goods, beginning or ending, my variable costing is going to equal my absorption costing. Or it could be the case that finished goods beginning is the same thing as finished goods ending, and if that's the case, then the two cancel each other out as well. Okay. Alternatively, in year two, I have a situation where my variable costing is 120,000, and then I had fixed overhead inventory of 200,000, and again, that's ending inventory. And we said up here we would add ending inventory. And then I have no beginning inventory. And therefore, I subtract 0. And therefore, if I have 120,000 in variable costing, and then I add the ending fixed finished goods, fixed overhead, 200,000, then I'm ending with absorption costing. And then I'm not going to go through it, but it's the same thing going the other direction. Okay. I could also take this formula and I could want to calculate, the goal would be to calculate variable costing. And so what I would do is I would take this and move it over here, and I would take this and move it over there. So if I wanted to determine variable costing, I'm going to use a little bit of crazy algebra on you. It's going to start with income under absorption costing. And then if I want to get rid of fixed overhead and it's a addition over here, then I'm going to subtract ending fixed overhead from both sides. And then I am going to add fixed overhead beginning fixed overhead. And that will cancel that out, and it'll cancel that out, and it'll move them over here. Okay, but this is the formula to move from absorption costing to variable costing. It's going to be absorption costing minus our ending fixed overhead in finished goods, and then adding beginning fixed overhead in finished goods. And that, my friends, is chapter 6.